Hello everyone. Yeah, back again. I'm back again, but the annoying thing is that I've made this video and upon watching it, I realized that the audio didn't come out well. So I had to like restart again. And you know my videos are always long. My videos are always long because I take my time to explain things for you because I want you to get things better. That's very stressful. I mean, I could have just decided to have sleep. I continue my sleep because this is just like after 4. But I was like, people have been on my neck to please bring out something, and I understand how that feels because when I was learning forex too, I never really had anybody to mentor me, so I was basically learning based on resources I got, and I was not eating from different sources. I was learning basically ICT. You understand? Get then later on, I came into Malaysian SNR. So I know what it feels like when you don't have a mentor to teach you and you're basically getting from the online sources. Sometimes you might ask questions that, oh man, why is things done this way? And the person who you learn from is not readily available by your side to answer your questions. I know how that feels. Okay, so let's do this first. Subscribe to the channel. Go and tell your friends that there is something in this content right now that I'm going to really explain for you. So if you've been watching things like top-down analysis and you don't understand those things, I will explain everything here. And I will not really use that phrase called top-down analysis because I don't want to give you top-down complexities. I want to make it very easy for you to understand. So now I'm going straight to the point. Please subscribe to the channel, like this channel, like the content, even comment on the content. I know when you comment on the content, and I will come back and respond you definitely. Now, so when you want to analyze the forex charts rather, I chose any time frame of my choice. The first video I did, I actually used the um, Euro USD. I could decide to use any other time frame, but just to save time, right? Just to save time. Now, you always have 3 time frames in view: your higher time frame, your intermediate time frame, and the lower time frame. The reason why these things are typed out was because in the other video I didn't type it out. In the other video it wasn't like this. I had to type it out manually in the other video. But upon watching it, I realized that my audio didn't come out well. So I need a mic actually, like a proper mic. I need a proper mic that will help solve my audio challenges. Now, mm, now, so you need 3 time frames, right? 3 time frames when you want to analyze the forex market, whatever currency pair, maybe it's crypto, asset, maybe stocks, whatever. Just work with 3 time frames. Now, your 3 time frame, one will be your higher time frame, one will be your intermediate time frame, and one will be your lower time frame. You can call the higher time frame your what? Your senior time frame, if that would make things better, if that would make it easier for you to comprehend things. It is your senior one, right? It is the senior time frame. And if you like, you can call your lower time frame the junior time frame, if that will make it better for you. Okay, now if you say, okay, I want to make my daily time frame my senior time frame, what that will mean is that your forward time frame will be your intermediate time frame, or your 3-hour could be your intermediate time frame. And if the 4-hour or the 3-hour is not okay for you as an intermediate time frame, you can add your own time frame and just, let's say, put 2 hours time frame. Do you understand? Do you get? So you could decide to say, okay, I want to use my 15 minutes time frame for my smaller time frame, or my junior time frame, or my lower time frame. Or you could decide to use 5 minutes or 1 minute. Do you understand? But in this video, just to make things faster and easier to understand, I decided to use a 12-month time frame as my senior time frame, or as my as my higher time frame rather. And I decided to use what? Okay, so I'm also deciding to use what? This 12-month time frame means that each of these candle is a what? It's a year. Look at 12 months means a year, right? Look at my dotted lines down to the bottom of my screen. Can you see that? You find that you are seeing January 25. The next candle says January 24. The next candle says January 23. The next candle says January 2022. So these are years from 2022 to 2025 currently. These are years. Each of these candles are just a year. Now, when you're on your higher time frame, so then I could say, okay, my intermediate time frame can be my 6-month time frame. And if I'm not comfortable to have my 6-month time frame as my intermediate time frame, let's say I want a 4-month time frame to be my intermediate time frame, I can add interval here manually myself. Do you get the gist now? Do you get the whole thing now? Then I could decide to go down to use the 3-month time frame as my junior time frame or as my lower time frame. Do you understand? Do you understand? Also, is that if I don't like the 3-month time frame and lower time frame, I can add my own choice and say, okay, for my own personality, based on how available I am and frequent I am on the charts, or maybe how scarce I am, I would like to use 2 months time frame as my lower time frame. Now, so the question is, what is the significance of having a higher time frame, a lower time frame, and an intermediate time frame for this analysis? First thing first, look at, I wrote, on the higher time frame, you are concerned about less data. That's your priority. You want to summarize things. So less data means what? Summary. If you want to summarize things quickly, summarize things, all right, or information, you basically need your higher time frame for that job. You cannot really get it like that on the lower time frame. Do you understand? So if you want to quickly summarize things or information, that is where you need your higher time frame. You can see that on the higher time frame, there is less data. If I should draw this box now, you can see that this box is very small. Everything is contained inside this box. Like the whole candle chart is just contained inside this small box, right? You can see the data is small. But the moment I enter into my intermediate time frame, let's see what happens. On my intermediate time frame, you can see that the box looks bigger because we now have more information. We're actually zooming in down into like we're actually zooming in down. It's more like saying you have an egg, right? And in the egg, when you enter the egg, you want to go down to the atoms of the egg, right? That's what we're doing right now. Now we're going down to a lower time frame, like the 3-month time frame. Now you can see now that there's more information. Going back to the higher time frame, the 12-month time frame, I have less information to work with. And when you have less information to work with, it makes it faster for you to analyze the markets. So with that summary of things you have on your higher time frame, then what's the next thing you want to prioritize? You want to prioritize your key levels. So for me, the way I get my key levels, I usually start with my line chart. And I put sensitive lines. Okay. Let me delete this box first of all. Okay. So now I want to get my key levels, my higher time frame. All right, my key levels. All right. Then now the reason why I'm not putting lines. Now you see in this video, I'm not going to analyze in this video. I will just show you the importance of having different time frames. Then I will make another video where I now carry out an analysis. Because if I want to analyze in this video, I'll end up making it an hour or 2 hours, which will not be too key for most of you. All right, so now I'm not putting my key level on this side. Do you know why? Or this side or this side. Do you know why? Because you can see that price has gone through it after a while. But unlike all these other areas, the price has not gone through it. You can see that the lines are still untouched and blank, still clean. Then I can now go to my candle chart to see more details. Okay, at this point we can see that price has rejected from this level. I can put it here, just to make everything snap, or whichever one. Okay, now after I must have gotten the key level on my higher time frame, the next thing I want to do is what? I want to get my direction on the higher time frame. I want to know, okay, is the market going down or going up? And even though I cannot determine if I cannot tell that the market is going down or going up, it's fine because I've prioritized the basic thing, summarize data, and what determine my key levels. So even though I don't know the direction of my higher time frame, no worries. My intermediate time frame can help me solve that issue. Do you understand? So when I will go down to my intermediate time frame. The reason why I'm doing this for you so that you don't waste time on the charts. You quickly check what you want to check and you leave. Now on the intermediate time frame, which is my 6 month time frame, you can see now that we have more data. If you look at this place, let me show you something. Let me show you something quickly. Do you see that this place where there was just this place where we just have only candle wick? We don't see candles inside. We're only seeing all these pin bars, right? All these pin. But if you come down to your 6 month time frame, what do we see? We see more details. We see that okay, fine. We can now see candle inside. What if you go down to your lower time frame or your lowest time frame or the junior time frame, which is our 1 month time frame? We see even more candles inside. All right. So now I'm going back to my intermediate time frame. On my intermediate time frame, what am I really bothered about? I'm bothered about what am I prioritizing? I'm prioritizing also finding more key levels. There are key levels that I may not have found on the higher time frame that I can still find on the intermediate time frame. Can you see? Now I can shift this one to this point here because it's just hanging somewhere on a straight line. It's not to this straight line, it's just a straight line, but I can hang it on this apex here. Do you see now? I've refined it. Can you see now? Alright. So how about the next thing on our list? On the intermediate time frame, what are we looking for? We're looking for direction. So if the direction was not clear for you on the higher time frame, in the intermediate time frame, the direction can now be clearer for you now. Do you understand? Then also key levels too is another thing that will be what we prioritize. Also on the intermediate time frame, you want to check for reactions on what the higher time frame stuff. Reactions. So that being said, then the next thing you want to do is to go down to your lower time frame and what carry out the real deal. So on your lower time frame, what are you bothered about? On your lower time frame, the first thing you're bothered about is what you're prioritizing. What reactions from the levels you've drawn from the higher time frame and the intermediate time frame. That is, for me now, my lower time frame is 1 month time frame, right? So I'm looking for reactions on the levels I drew from the 12 month time frame and from the 6 month time frame. Those levels I drew from those 6 month time frame and 12 month time frame. Now on the 1 month time frame, I will go and look for reactions on those key levels I've drawn. Do you understand? And what are the kind of reactions I'm looking for? The kind of reaction I'm looking for is a break of structure, and that's all. Nothing much. Now there are two types of break of structure. I told you guys. I had another video where I explained it. The two types of break of structure you have is one, a continuation break of structure, and the second one is what? A market reversal break of structure, or you can say a market shift break of structure. Okay, so okay, yeah. So now the thing is this. Now this is why you have to understand why we are doing this. Because if you didn't mark your key levels and you went down to your lower time frame and you saw a break of structure for market reversal or market shifts, you'll be thinking that the price or the market price is going to reverse. But because it was not on a key level, that's where you begin to hear things like fake. People call it fake market structure shifts. Why do people come up with such terminology that it's a fake break of structure, it's a fake signal for reversal? It's because although it appeared on your lower time frame, yet it was not on a key level. It is a key level that will warrant you to take the trade or exit the trade. So you can have your break of structure appear anywhere on space in your lower time frame, but it does not guarantee to take the trade except it is around key levels. Do you understand? Now let me give you a quick snapshot of this whole thing. Look at this 12 month time frame. Look at this one came from the intermediate time frame, right? Let me show you something. Okay, let me show you something quickly. Let's even take these ones. This 1 and 2 I'm touching right here. This 1 and 2 I'm touching right here. Now, if you come down to your lowest time frame, can you see that we have some reactions? And from this reaction, what kind of reaction is this? Is this not a break of structure? If it's looking foreign to you, to make life easy for you, please just go to your line chart. Life is easy. There should be no stress. Is this not a break of structure that is right before our eyes? What more could this be? Can't you see how that there were 2 steps? 1, all right, and 2. Okay. All right. Can you see that? Can you see that? And can you see how that this price broke down beneath it? Bam. Broke down. The moment this price broke down beneath it, that's your market structure shift. That is your market structure. That's your break of structure. Your break of structure market reversal shift. The market has reversed. You can see how it came down. Vroom. Just came down. So back on the candle chart, you can see. Let's see what it looks like. You can see. So it actually gave us a break. Can you see that? It gave us a break. It gives a break. So so what else again? Now you can see it came down somewhere here. We don't know why this thing came down here, but let's see. Okay, can you see that there was actually a key level here in time past? Can you see? So there was a key level here in time past. That's why when this guy on the lower time frame, can you see what the guy did? Let's just watch. Let's just watch. Remember that this level is from what? Oh my god, very beautiful. I'm sure this is making more sense to you guys. You can see that on the 12-month time frame, it is what? Okay, where are you, boy? Where are you? So that's this guy that reacted here came from a level around here. Isn't that right? Now, that's why you need to use your candle chart, because sometimes you cannot get it on online charts. All right. So now, if you come down to your monthly time frame, on that line you just drew, can you see how that market came to that place and give us a market structure shift on this level? Where did it happen? Look at this point. Turn it to your line chart. Can you see that this was a level? This was a level. Okay, let me delete this other one so it won't be it won't be difficult for you. Okay, I want to make it as simple as possible. You can see that on the let me delete every other ones as quick as possible. Now good. So we're left with just this. So this was a time frame, right? As a time frame, this was a key level from the 12 months higher time frame. Go down to our lower time frame, the monthly time frame. Look at that level. Look at where it came from. Now see what this guy did here. On that same level, this guy gave us a break of structure. Where did it happen? Can you see this part? If I should do a replay, let's try to see if we can practicalize something here. Very good. So at this point in time, let us imagine that, okay, fine, we were not very good. So let's say at this point in time, we've actually put our line here, you can see that, okay, fine. Market has not come down here. Delete this one. Market has not come down here, right? This is a key level on the monthly. Market has not come down, but we see that this is a key level and we drag it out. We could just come on the monthly time frame and we'll be anticipating what? We're anticipating price to come down to that key level from the monthly time, from the 12th monthly time frame, rather, from the higher time frame. Okay, then this price, let's see what it does. Let's, how do I play it? Okay, now I'm playing it already. Now let's see what happens. Let's see what happens. Let me try to see if I could fast forward a bit. Okay, it's still forming. Okay, now it's going to come down. Let's just watch it come down. So at this point now, it's just coming down to the line. Okay, let's just watch. Let's just watch. Now at this point, pause. Go to your line chart. What can you see? You put a line there. This is what I'm doing, because that is a structure that was formed. If this structure is violated to the upside, it might just signify that, okay, fine, there has been a break of structure for reversal. Let's see what happens. Let's see what happens. Let's see what happens. Bam! You can see that rejection that we just saw here, that sharp rejection. Okay. Then, like I told you, I'm not analyzing here. I'm just trying to make you understand how this thing works. The essence of having a lower time frame, higher time frame. Now, the moment this guy, now you see this candle now we're looking at currently. You see this candle we're seeing here. It is still lower than this other candle. Now, this candle that is forming, if this candle should close above this one, let me zoom it very well. Let me zoom it very, very, very well for you to understand. Listen very carefully. This current candle that is forming, if this candle should form finally and close above this guy, that has already hinted us. Because look at, let me show you. Where's my line? You can see that the top of this candle, the high of this candle, and also the body, but basically just the high of this candle. You can see that this candle itself has broken above the high of this candle, this small blue candle, and this bigger blue candle. You can see that this blue candle has broken above the high of this small blue candle. If this candle is still forming, but if it finalizes formation, when it finalizes its formation and it is well above this one, that has signified a break of structure ready for you. Then I'll be anticipating it to finally break above this level. So let's just continue this whole thing. Okay, good. You can see now that this candle has closed above it. So this is a break of structure already at this point. Now at this point, great. Now that this candle has formed above this level, finally it is a break of structure. Finally, it is a break of structure. But will you just enter at this point? Will you just come and place buy? Pam. Oh, will you just come and place buy? Wait. Okay, I cannot buy on replay. Will you just come and place buy and put your projection? How do you guys do that thing? I'm trying to mimic you guys. What is it again? Will you just come and place buy? Pam. Here, and then put your stop loss maybe somewhere here. No, I won't do that. You can do that. It's not bad, but the best thing to do is to wait for it to come down. Wait for this price. Okay, wait for this line to check down back a bit. Let's say somewhere around inside this place. And how did I know? There are tools I use in doing that. But right now I'm just doing offsite. You can let it come down to somewhere inside this place. You get. But let's see if it comes down. Sometimes it might not. It might not give you that sharp reaction. It might just keep on shooting upwards. It's fine. It's fine. It's fine. And to solve that issue of okay, when it broke at this point, this big guy here, you see this big guy you are seeing here that broke above this smaller guy here. To solve the issue of I don't want to miss the trade, you can at that point you can then go down to a lower time frame, like let's say weekly time frame or daily time frame or 1 hour time frame to go and check an entry in that place. But right now, for me, my own lower time frame is the 1 more time frame. Okay, so let's continue this thing and let's see where it takes us to. Let's see if it's going to come down. Let's just try and see. Let's try and see. Or it could just keep on shooting up. Okay, you can see that it just kept on shooting up. So it didn't really come down. Okay, so now is that. Okay, is it coming down? I don't know. So now is that you understand how this thing works, right? You understand how this thing works. So that is how you get your trade. That's how you do your things. Okay, wait, it's actually coming down. Okay, it's actually coming down. I don't have that time to wait, but at least it has come down to some extent. I don't have time to waste, but at least, but once it has broken this level, you can see that there are reactions there. So once it has broken that level, we're good to go. So you can just take your trade all the way up. So you can see how that you can see how this thing plays out for us. Okay, yeah, all right guys, so I believe I've done a good work to help you understand the purpose of time frames, right? Time frames, your higher time frame, your intermediate time frame, and your junior time frame. I could keep on talking from now till tomorrow just to ensure that you guys understand this thing perfectly, but I guess now it's quite clear now. So in the next video I'm going to do, that's where I will now perform analysis. Oh, it ended up coming down there. Interesting. Let's see. Wow. You can see why I told you not to. You can see why I told you not to rush. Okay, you can see now. Okay, you can see. And did you enter that box like I said? Fantastic, it did. Can you see? So if you are entered at this point here, it will not be too good. Your stop loss will be too wide. Too wide. But you could have just wait a bit and probably place a buy limit here. Then it should just bounce up and keep on going. Okay, so currently the price is here currently, right? Okay, so the replay is done because that is the current point of price. So this is how it works. So if it's on your lower time frame, you place your entries. Wow, I love this. All right guys, please I plead with you, please let me show you my channel. Let's look at the channel. Just take a look at the channel. Yeah, I should tell you about this thing. Look at traders casa. You can use trader casa to actually retest your strategies. It allows you to do replay with ease, but although it comes at a cost of always showing you ads. You can try and check it out. Tradecaster, if you want to do back tests. How did I even do it the other time? So yeah, you can just try it out. You can do your back tests. This is not my data. I'm here to use this thing. I don't really have time these days. Okay, so how do you want to use it? Okay, let me show you how to use it. Or should I do that in the next video? I don't know. Okay, let's go. I think that's it. So you can actually do your back testing, your replay. You won't be charged fees unlike TradingView. However, the downside is that you will always be exposed to what they call it, Um, ads. Okay. All right, guys. Take care.